Well, thank you so much for joining us here today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Here it is Thursday, and that means it's weekly export sales day. And let's take a peek at what we had for the numbers a little bit ago that came out from USDA. Okay, well, buckle up. We had the corn with net sales reductions of 265,000 tons over this past week. We went backwards. Soybeans, we had sales of 680,800 tons. You had soy meal at 291,500 tons, soy oil at 900 tons, and the wheat at 294,700 tons. Now we have numbers for grain sorghum and cotton and rice as well. Well, grain sorghum, net reductions of 3,700 tons. Upland cotton, only 160,500 running bales. Now, the rice did come in with a number of 41,500 tons that were sold here this past week. And we'll get to the meat trade a little later, but let's bring in Brian Hoops of Midwest Market Solutions and talk about all this against the backdrop of just some nasty selling overnight. In fact, Brian, let's take a look at some of these prices here that we had overnight. I'll bring up the corn board here with our quotes provided by Bar Chart. And we'll show everybody what we're talking about. July corn down 11 1/4 this morning at 5.50 1/4, barely hanging on to $5.50. You had December corn all the way down to 4.93. That was down another 6 cents overnight. In the soybean trade, here you had July down 10 3/4 at 13.26 1/4. November down 11 1/2 at 11.76. This is just really getting ugly in a hurry here in the last 2 days. On the wheat trade, with the wheat tour going on and terrible results yesterday, here you had July Chicago wheat going down 16 cents at 6.09 1/2. We're getting in danger of putting a 5 handle on that one. On Kansas City wheat, you had July down 28 1/2 cents at 8.57 this morning after a high of 8.84 last night. And in Minneapolis wheat, that July contract there was down 28 1/4 at 8.31 1/2. Brian, this just looks very dark today on the ag commodity complex here on the grains. Put some silver lining on this, if that's possible today.
Yeah, Marlon, it's not very fun, that's for sure. You know, we have a higher U.S. dollar that's working against us, working against some of these outside markets as well. And so it's all kind of spilling over into the grains with heavy technical selling. A lot of times we will blame the funds here on this type of selling, and because they aren't following the trends are clearly down for the grain markets right now, and they are pushing those markets lower. So export sale wise, you know, if you want a bright spot, it was new crop soybeans. We had an announcement there. 14.3 million bushels sold to an unknown destination, 6.9 million bushels of new crop soybeans sold to China. But on the flip side, you had marking year lows in wheat and corn of the old crop variety. We had cancellations of 10.7 million bushels by China of corn. They also canceled 4.4 million bushels of soybeans this week. So, you know, they're rolling out of some of these old crop contracts, getting some coverage for corn and soybeans in the new crop variety. But as prices move lower in here, we may see them to start to pick up some of those new crop purchases just in case, again, as a hedge against prices moving higher into the summer. So right now, you know, prices continue to bleed and work lower. You know, if you're a producer out there, I think things are kind of tough right now because of the prices where we're moving at below $5 in the corn market, soybeans below 12 in the new crop category. You know, you can use some of these option strategies to give yourself a little bit of insulation in here. The growing season is deadhead in front of us. I don't know that you'd want to be making a lot of new crop type sales or being a real aggressive marketer on the cash side of things, but you can buy some short-dated options that will get you through at least for the next 30 days and maybe even longer to give yourself a look at this growing season in case we do have a rally. It'd be just cheap insurance, and for weather market, we can see a significant gain, but you have to have the right weather conditions. Those are not on the table in the next week or so.
Yeah, we haven't even really started the growing season yet. We're not even done planting. So yeah, there's a lot of unknowns lying ahead yet. All right, Brian, we'll pause right here. We had some beef and pork export sales numbers as well. We'll see what kind of a surprise we may have there when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions. Now, let's take a look at the beef and the pork export numbers as they came out here a little bit ago from USDA. So what did we have this week? Well, we had a grand total on the beef of 17,400 tons and the pork at 31,900 tons that were sold here this past week. I believe both numbers were just slightly above what we had a week ago at this time, weren't they, Brian?
Yeah, they were, and probably not going to give us much in the way of any direction for the marketplace. You know, the hog market had 2 days up, and then Wednesday kind of a sharply down day again. It's all about short covering in this hog market. It's kind of the same thing we're faced with in the grains, where the trends are down, the funds are selling small rallies, or there's stops underneath support. And as we hit those support levels, if they give way, there's selling stops that are pushing us even lower. Now, the cattle market did have a pretty decent rally after midday yesterday. The bids in the Southern Plains were raised. They started off in the 168 area, rose up into the 171 up to 173.50. There was just a handful of cattle in 176. They're kind of special cattle, I guess, that was sold in Kansas. So the move is going to be higher in the cash markets this week, just kind of filtering out where this cash trade develops. But it looks like we're going to see higher money. The futures are moving higher along with it. And then, of course, tomorrow afternoon, that cattle on feed report comes out, and that looks to be another friendly component for this beef market. Kind of the one thing that's positive right now is live cattle in the cash cattle markets. They're very strong because of very tight supplies.
Well, let's look at how we finished up yesterday. And on the live cattle board, we did have the nearby contracts a little higher. In fact, significantly higher on June. It was up 95 cents. It closed at 164.82. So you could tell they were building back in a little bit of strength in the market late yesterday. On the feeder cattle market, we finished up the day with August down 32. It was at 231.15. That was a little concerning considering corn was getting hammered. On the lean hogs yesterday, well, we finished up the session with June down $2.32 at 84.87. So, you know, when you have a market drowning like that, you don't necessarily throw them an anchor from the shore.
Yeah, it's a market that's going to continue to struggle, I'm afraid. I know a lot of people trying to buy hogs thinking that we have to go higher, and we really don't have to do anything in this hog market, especially with the cash underneath where the futures are already. So cash remains stagnant. It's really the leader of the hog market, cash, as well as the live cattle. Cash is going to be stronger in the cattle market this week. Futures are following higher.
Brian, thanks for the comments today. You covered a lot of ground here with all these numbers. I appreciate that. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri.